Looking at Bitcoin, it's good to see that Bitcoin actually bounced from that upward support level. That came in very, very handy, and we saw signs of that just more than 24 hours ago if you were doing your cheat sheet. It looks really good. Bitcoin has started to just do a change of trend. It's early days yet, but that could put the 71, 72,000 in target. Always remember that everything that you look at inside financial markets is always going up and down, up and down. This is just the way things operate. And of course, when price comes down, especially over an extended period of time, people lose hope. They run away. Emotions play a key role in your profitability. Turning to the crypto market, we can see that Bitcoin has done very, very well. Look at this strength. You'll notice this previous peak in Bitcoin and see how far above that line Bitcoin actually is. When you look at Binance Coin, not even close. It's far weaker than Bitcoin. What about Ethereum? Far weaker. Solana? Whoa, baby, doing well. What about XRP? Oh, come on, XRP, you can do better than that. Doge can do better. Cardano, ADA can do better, and SHIB can do better. What it means is we may get a bit of a slingshot in terms of the alts. We can see that's happening with Solana now. Don't be too surprised if we get follow through on the alts that they'll do really, really well. Springboarding above their previous high, just like this, just like what Bitcoin did. That is definitely on the cards. But of course, there are no certainties. We've got to play the probabilities and we have to look at structural levels. If you were doing your cheat sheet yesterday, you would have realized that the S&P 500, the NASDAQ, the Dow, and the Russell put in a divergence from Bitcoin's price. Now, this divergence generally recognizes that there will be a follow-through because we know Bitcoin cannot escape ... Please let me know what that is in the comments. If you understand that concept, you're already on the way to making a fortune. These kind of divergences can make you a huge amount of money, but you need to be aware and you need to be mindful. Just doing your cheat sheet each day is a way to guarantee positive returns across a very extended period of time. We saw some really interesting volatility inside the Forex market. You'll notice that the DXY dropped like a brick and the lower boundary had to be updated inside the service. Also, the euro dollar, the upper boundary had to be updated and the Aussie dollar upper boundary had to be updated. You may have noticed copper's upper boundary was updated yesterday and the DXY's lower boundary was updated today as well. You can see all the charts are intercorrelated. Not surprisingly, on the commodities front, the silver upper boundary was updated. A couple of days ago, the crypto market looked really ugly, and we can see just in a few days, especially if you have that timing inside the market, you can do incredibly well. Look at Solana, it's absolutely gone for it. Near has gone far. IMX and Stacks have done particularly well. We notice Pepe is in the middle of a pullback, but it's done incredibly well recently. When the markets are really red, a lot of people just run away. They ditch everything. You want to change that emotion to actually starting to scale in. It does take skill, but it pays very, very handsome dividends. And you can see in order to get this 7.67% or this 12.74%, you needed to be in Solana and in Bitcoin more than 24 hours ago. In other words, you had to buy when it looked pretty ugly. Unfortunately, emotions don't allow people to do this. When the emotions of fear come out, everybody just basically runs away until you realize that you need to stay. In order to get any specific percentage increase in 24 hours, you must have been there more than 24 hours ago. Just give it a minute or two. But why is it green today? Why did it change? Understanding that all of the markets and therefore all of the charts are intercorrelated and interconnected is your first step in making life-changing wealth. But remember, life is not about what you get, it's about who you become as a human being. In other words, you need to manage your emotional wealth and your financial wealth. I've been saying for quite a while now that the markets are looking reasonable. They're not looking particularly weak. In certain factors, in certain sectors, they look really good, such as IT, financial, materials and communications, and of course industrials. The mistake people actually make if they're just trading, say, for example, Bitcoin, or just if they were just trading Apple or Tesla or any particular crypto, they would just focus on that specific chart and ignore everything else. This is a newbie mistake and a very, very costly one. Having been inside financial markets for many, many decades, you absolutely must understand the Tier 1, Tier 2 and Tier 3 charts. Of course, you need to know the structural levels and how they're all interrelating with each other. If you did that, you were already leaning in very heavily in the past 24 hours, and the result, very juicy profits. If you were leaning in the past 24 hours, please let me know in the comments. If you would also like to share what you were leaning into, that would be quite good because I can share some of the levels in upcoming videos. We can see inside the main market, the fear gauge of the main markets was decreasing. What did that lean into? Well, the main market, indices and all the subcomponents just going for it. We see bond yields absolutely got smashed. The DXY got smashed. That pushed positive price momentum into gold. You'll notice that a lot of people in the gold industry want drama. They want the end of the world. No, it really makes a lot of sense because gold lives from that. A lot of people talk about the money printer going burr, and that's what this blue line represents. Here the money printer came off, and what happened to poor old Bitcoin? It's very sensitive to risk on and risk off activity. When the money printer just went for it, what are we seeing here? We've been keeping our eye on this for quite a few episodes. And if you want this indicator, it's available at CTKSMethod.org. It's just part of the service. Understanding the complexity of financial markets is quite difficult, but just know this, if you're new to finance, the US 2-year, that's a bond yield. When bond yields are going down, that generally makes the markets go up. We draw three-dimensional price paths so we understand during a specific month. They always start at the month and we project right out to the end of the month. That's also inside the service. What you can see is the yields have been going down. They're following this normalized negative price path. That's really good for risk on. This is what we want to see. But one thing, don't forget that even if it goes highly negative, that will cause the major indices to go up, crypto to go up, all the alts to go up, and of course gold and silver to go up as well. But when this normalizes back to this normalized negative price path, you get pressure on the markets. We could also see that kind of pressure even if it continues to go negative, so just be aware of the wavy nature of price. Is this play being confirmed by the US 10-year yield? Absolutely. When you look at big shots down like this in the US 10-year yield, it just literally decayed, and that would push gold and silver up and the DXY down as well. You can see this normalization to the normalized negative price path called a CTKS path. What do you think is going to happen now? We've had this variance from the normalized price path all the way down here. Do you think in time it will come back up? And what would that cause markets to do? These are the things that you need to be aware of if you, of course, want to be professional. Professional just makes money consistently. Retail basically looks at a chart like this and says, I'm not interested in this, I'm not trading this, give me timestamps, I want to fast forward through only to the thing that I want to look at. Wow, you're going to lose a lot of money. Ken, that's not very nice to say the truth. Yeah, well, Having been inside the financial markets for many, many years, one thing that we always tend to do at the start, we know pretty much nothing. We don't know how charts are intercorrelated and interconnected, and also their significance. For example, when we look at junk bonds, very, very few people would look at this, and we can see it's going positive. But what the heck does that mean? It means risk on is in the market, and we can see that junk bonds have cleared a level of short-term recent indicative price analysis, or RIP analysis. What does that mean? It means that retail will be looking, if they look at junk bonds, to this particular area and saying, oh, this is looking good. We may get upward price momentum. And they're not really wrong in terms of that, but it's the structure underneath junk bonds that will determine where everything goes. But how does this relate? For example, if you're trading Solana, or you're trading Pepe, or you're trading anything, Bitcoin, or Apple, or Tesla. If junk bonds are going up, guess what? Everything will go up with it, which means the risk on asset classes. But you need confirmation. The US 10, the US 2, the DXY are all going down. You would expect the euro and the Aussie dollar to be coming up and dollar yen to be coming down. This is the way that you need to look at markets. Don't look at just one chart. No chart should wander alone. Gold has been doing really well this month. It's been following the normalized positive price path, and you can see it's got a lot of power here. What is that power due to? If you know the answer, it really comes down to what the US 2-year is doing. And you know what that's doing? It's going negative. It depends on what the US 10-year is doing. And you know what that's doing? It's going negative. And also the DXY. When you look at gold, if you're not looking at the structural levels on all of those other charts, especially junk bonds, you're in trouble. Gold and silver love to hang out together, and we can see that silver's been following the normalized positive price path at the current time. What's that mean? You're told by the institutions in May, what do you do? Sell in May and go away. When we look at the VIX, what's the VIX been doing? It's been going down the entire time. It's following that normalized negative price path. And you note that when it gets too far away, it's drawn back into it. So just be aware how normalization works. The concept of going away in May hits so many people, but we need to look at the three-dimensional analysis. What is price actually doing? We can see it's just obeying the normalized positive price path, and because of the decay in the US 2-year, the US 10-year, and the DXY, it's spiked up above. This, of course, is the NASDAQ. The NASDAQ has been doing particularly well. But if you sold everything in May, as you would have been advised by retail influencers, hey, guess what? You missed out on all of that juicy profit. We never subscribe to anything Wall Street tells us to do. Wall Street says never buy a falling knife. Why? Because they are. Wall Street also says stupid little statements like, oh, sell in May and go away. Why? Because they want in. And they don't want you there at that time. Please let me know in the comments, were you fortunate enough to stay in the market and disregard all the mainstream media fear, or did the mainstream media fear get to you and you sold in May and your profits went away? When we look at the S&P 500, if you sold in May and saw your profits go away, you would have been realizing that the positive price path has been followed. But what typically people do when they sell, they don't just go away, they completely switch off. They're no longer in the market. They will get drawn back into the market at the absolute worst possible time, after the run has had its run. This is why you need to be constantly aware of what particular price path is being followed. Is it a positive price path? Is it exhibiting more strength? If it's exhibiting more strength than a normalized positive price path, and don't forget, this is not trying to predict where actual price is going. It's trying to predict the end of month price. But If it's stronger than that normalized prediction, it means that certain things are happening inside the market. And you've already seen that the DXY absolutely decayed, the US 2-year decayed, the US 10-year decayed, the VIX decayed. So much for sell in May and make your profits go away. We can see that Microsoft is following the normalized positive price path. Apple is also following the normalized positive price path, but it's got more power in it. This is a good thing to take note of. When you see something that has more power initially, generally it comes back to the normalized price path and then resumes upwards. And these price paths, they're not randomly drawn. They're drawn by an understanding of structural support and structural resistance levels inside the market. Nvidia is a bit of a favorite, and if you sold down here, you've missed a near, 14.2% profit already, and the normalized positive price path has got more room to run. These price paths are done at the start of the month and then talked about inside the service video. They project all the way to the end of the month, and they tend to be scarily accurate. MicroStrategy is also a favorite inside the community, and we can see MicroStrategy has been doing really, really well. If you sold in May, you can see that MicroStrategy has put on a near 50% profit, and we're only 15 days into this month. Therefore, what is better, to just listen to some absolutely stupid statement like sell in May and go away, or to look at your structural levels, mark up the interdependence between charts and know where things are going? Which one do you think is more profitable? Total crypto market cap has done incredibly well, with the decay in the US 2, the US 10, the DXY, dollar-yen combo, the uptick in the euro dollar, the uptick in the Aussie dollar, and the uptick in junk bonds. And of course, how that flowed through to the S&P 500, the Nasdaq, and all the sectors. It is not surprising at all that Bitcoin and all of the crypto market has been rallying. This is how interconnected charts are. But most people have no concept and no idea. If you wish to be more of a financial and emotional blessing to yourself and those you love, you must have knowledge. Now, what's happening to Total right at this current time? Let's zoom in on this price action from a structural perspective. Okay, let's look into this. Where is the structure playing on total crypto market cap? That is the entire crypto market. What's cooking in here? If you were driving, I would suggest you put on the indicator. So let's do that. Indicators are so much fun. Let's check it out. We can see a lot of positive price momentum, and it's been driven by the decay of the DXY and the decay of yields. Around this $2.328 trillion mark, we have quite a degree of structural resistance. That is important. We need to overcome this to start to really push upwards, and we've already tried to do that. The sellers were a little bit too strong. These structural levels are all about understanding that sellers are hanging out there trying to push it down. If it gets above, it's going to try to either confirm as support and go for it, or come back to the one below. If it doesn't make it all the way back to the structural level below, that means, hey baby, there's a lot of buyers there and they're going to be pushing into the market. What are we seeing right now? We're not confirming that there's been a break above this structure. There is no trend change just yet. We can see this is a broken confirmation just at the current time, but that doesn't mean it's not going to change around. We realistically need to get first above that 2.332 trillion and ideally up towards this 2.34 to confirm an uptrend, or in this case a continuation of an uptrend. The bears will be seeking to push it down to this structural level and then down to lower structural levels. The bears make their money by price going down. The bulls make their money by price going up. If you want to be part of the best global family on YouTube, please like this video and subscribe. We'd love to have you here. and we're all about gratitude and appreciation. We know that life is a multi-dimensional thing. So many people want to be successful, but they don't understand. Success brings its own problems with it. What you want to do is just to be the best possible version of yourself. Having more money along the way, yeah, that's a really good idea. Just like we did on total crypto market cap, let's pop on the indicator and see where the structural levels are. We can see structurally there's pretty stiff structural resistance at that 66,845 mark and that 67,012 mark. We can also see that this has been pretty tough for Bitcoin to get above. It's tried to get up there, but not so much. It's getting rejected at the current time. And we also see that total crypto market cap is under resistance. When you get such a big decay in the DXY, the US2, the US10, and all the associated charts, a degree of normalization is very possible. So we need to be careful and just don't get sucked in. A lot of people see, oh, it's going green, buy, buy, buy. It's going red, sell, sell, sell. That's just like go away in May and watch your profits disappear. All you really need to do is to just look at where the structural levels are, because they're the levels the price is going to relate to. If it comes up through multiple structural levels, it's going to get stopped at a structural level until it can just congeal itself, until it can consolidate, and then it will go for the next levels above. If it continues up like this, if it starts to break down and it doesn't confirm support, it's going to the levels below. It's a very, very simple system. But the concept is you need to know where those structural levels are, and those structural levels are inside the indicator. And you can pick up all the indicators, the structural indicators of all the charts that I've gone through inside CTKSMethod.org. A lot of people will have been drawn in by this positive price momentum. Don't forget, retail buys on green, and then they see that it's not going their way. The institutional players love to flush out the long, so just be aware that we can come down to that 64,850 mark, or we can get up to that 67,250. We need to bypass these two levels of pretty strong structural resistance. And don't forget, structural resistance is also playing out on total crypto market cap. That means the entire crypto market. But I would suggest that you do one of two things. When we zoom out, we know that Bitcoin is coming up. It's been going down for quite some time. It's just done a cut over, and it can go potentially higher. Just because we get a little bit of a pullback, that doesn't mean that you should run and just jump away, like selling in May and going away. You must have a better emotional strategy to manage your profits, and emotion counts for so many things. I was talking to the ambassadors about emotion. Emotion is a critical thing to maintain and control. If you don't have emotional control, you will find that you're going to sell and buy at all the wrong times. It would be really good to get your interpretation on emotion and how it either works for you or doesn't work for you or others. Please let me know in the comments. It's a really important thing to think about. The way that I trade, I make sure that I know what the Tier 1, Tier 2, and Tier 3 charts are doing. And then I look at the Tier 3 to seek to predict what could be happening with the Tier 2 and Tier 1. Right at the moment, we can see that on Binance Coin, and Binance Coin is really important to look at. And thank you, Kirk, for your very kind comment. We can see that we got above this 581 mark. That's quite substantial structural support. We could end up coming back, or at least to here, and just confirming, creating a higher low, and then just seeking to break out of this particular pattern to challenge this 591 level. You want to keep BNB or Binance Coin in mind because it's a very good indicator. It's like the canary in the coal mine. You want to see what it's doing. If it's going up, you can be assured that other people are piling into the crypto market. After all, Binance is the #1 crypto centralized exchange on the planet. Much appreciation too to Pete for his very nice comment. I thought of you and the manner in which you run your channel. It grows organically with great content. Others spend a lot of time on sensationalizing and engagement farming, selling fear. They may have more followers but watered down material full of fluff. You are the real deal, and we see that and appreciate that. Thank you so much, Pete. That's really kind of you to say. When we look at Solana has put in a really good effort. Now, what could happen from this point onwards? It really depends on the structure of this chart. Let's pop on the indicator. Putting on the indicator reveals that we're seeing a lot of structural heavy resistance at the 170 mark. When you look at a specific chart, not all structural support and resistance levels are created equal. Some are really strong. When you get a lot of clustering, the more clustering you get, especially if they're thick levels, and you can see that 170 is quite thick. What that means is that Solana's price could continue up. Don't forget, we can draw back at least to challenge previous highs. The retail traders and investors will want to see that kind of price appreciation and be actually going in on these pullbacks, and they're the more advanced retail. One thing that you really might like to keep in mind, when price is going up, it's not going up to the moon, it's going up to thick structural levels. If you can keep your eye on where that structure is, you're 20 steps ahead of everybody else. It's very profitable to do. And you can see if you were buying on red with Solana, especially at structural levels and selling at structural levels, if that was your strategy, you could be doing really, really well. Don't forget, it's not about just getting in and out and just having price go your way all the time. Sometimes you want to actually buy on the way down. That's a very powerful technique, but always you must know what you're doing. Putting in the hard work is very important, so that's why we always say we are dedicated and committed. We either win or learn and never blame. If we blame, we're losing the experience that was handed to us as a small gift. Guess what? If we don't learn, that gift will come back and it will get bigger and bigger and bigger until we pay attention. Unfortunately, we do not tend to learn from our successes. We tend to learn from our mistakes. So knowing that opportunities and life resets daily is really important. Yesterday is done and dusted. And when you know that the universe out there wants you to succeed, every day you can show kindness, integrity, and gratitude. Everybody is in a tearing hurry and just saying, I want to go all in and more. Instead of doing that, start small and scale. Get to learn what you're doing or you'll blow your accounts up, guaranteed. And going slow to go fast is the definite key. And of course, just always remember that you are worthy. All results come from the mind, and a better mind creates better outcomes. Better habits create a better life. So it's literally all about habits. If you can create habits of kindness, habits of inner and outer peace, habits of doing the right thing when nobody is looking, habits of learning humility and patience, success and money is guaranteed. But don't forget, your worth is not defined by your money. Your worth is defined by who you are as a human being. Therefore, fulfillment, meaning, and happiness are far, far more important than just about anything. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.